Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Thursday, May the 10th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. Nobody can tell you what the market's going to do, so we create our main two hypotheses, which are our trade plans, Hypo 1 and Hypo 2. Then we wait for the market to open, show us who's in control, and then execute the plan that best suits the market. And then we watch to see if we have the possibility of going into our alternative hypos, Hypo 3 and Hypo 4, which are our expansion hypos, which represent turning into a trend type scenario. This is a subscription room. If you're interested in checking out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading analysis during the course of the trading day. One word of note is tomorrow will be the last free pre-market session for the month. And it'll go back to just the members only. So if you're interested in coming in and doing a free trial or joining us, send me that email at quantumleapfutures@gmail.com, and then I can give you access for next week. All right, with that done, let's just get the disclaimer out of the way. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So looking at yesterday our Hypo 1 was an open auction, out of range, a push down to close the gap, and then somewhere between the gap close and the 69 with a possible move down to the 62, but we were really looking for buyers to step in, a rotation up into the overnight high at 84, and then a push up into the 91 with maybe a late day probe, but closing somewhere in around this 91. Hypo 3 was a gap and go with our gap and go rules, and basically we got basically Hypo 1 combined with Hypo 3. We did not close the gap. The one interesting thing to note is the fact that we did get a neutral extreme day. So at first, our Hypo 2, which was open auction out of range and a push up into taking out the overnight high or failing to take out the overnight high, and then rotating back down into the balance and coming back down into the 62 area, it was looking like that was going to set up with this move down, but then they rotate up, and then we talked about this mid trade and how I did not like the mid trade. And the reason I didn't like the mid trade short was it was a valid trade. There was nothing wrong with it. But here's the things that really bothered me. We had on the breakout, we had volume coming in. There was some big buying bursts coming in. And then it was the location of the mid that was bothering me because of the fact that we were inside of the opening swing. And usually once you get inside an opening swing, you got a good probability of traversing the opening swing. So your stop on that mid short had to be at 79.75 above that. So basically, and I was looking for the possibility of seeing, we've seen so many of these neutral days lately. I was thinking, okay, we could see a neutral extreme with a test up into the 2700s. And basically, once they broke the other side of that IB, the initial balance, and got up and they got above the overnight high, they came up to our key line in the sand, which was at 91.75, held that, accepted that price. Okay, remember that there was a microcomposite VPOC at the key line in the sand, and that's why it became the key line in the sand. What did they do? They accepted that price and moved up, tested the 2700, rejected it, and basically fought the 2700 before coming back, testing the 91. I thought we'd close down here, but we got a late day buying push, and there was volume and heavy buying coming into the end of the day. So we get a neutral day with extreme. We get the VPOC shifting up. What does that tell us? It tells us look for continuation in the Globex. Okay, and what has happened in the Globex? We opened auction in range, pushed down, tested that that 91 area again, accepted it, put in a higher low, and then we pushed through, put in a weak high here at the 2700 with the double top, actually became a triple top, and then we blasted through to 0250, tried to hold the 2700s, come back down into the 97 area, and just basically we're fighting this. And then we got the news and we blasted off, and the target was this 270675, and we missed it by 3 ticks so far, and right now we're still trading in the 2705 range. Let's take a quick look at the news. 8:30 we had core CPI came out at 0.1 versus 0.2. Counting jobless claims came out higher than expected, but initial jobless claims came out better than expected. So the market liked this news, and we popped up. We've got 52 minutes. We've got Bloomberg consumer confidence. Then we've got natural gas at 10:30. Then we've got the Bank of Canada review at 10:30 as well. And Cleveland CPI at 11, not a big one. WASDE report at 12, and 30-year bond at 1 o'clock, and then at 2 o'clock we got the federal budget balance. So, a fair amount of news today. We also have some earnings after the market. NVIDIA, Trade Desk, Yelp are going to be the big ones. So far this morning, there's been a lot of beats. Duke beat, Himax beat, Enbridge beat, Revlon missed, but that's not a big one. Rand Gold missed. So most of the big names again are coming out with strong earnings again. Now each day I like to start my day with a simple candlestick chart. This is a routine I do every day, and I do it here. People say it's rudimentary, but sometimes keeping it simple is best. And what I do is I start with a simple candlestick chart. I use a 9 EMA, a 20 SMA. I'm starting with a larger time frame, the monthly, because I want to see where we are in terms of the trend on each of the periodicities, so that I don't get my bias wrong in the bigger picture. And you can see that I'm looking for slope and separation of the moving averages, price paralleling the 9. Are we challenging the 9, or are we violating the 20 with a possible trend change? 14 months of one-time framing up. February, we violated the one-time framing, so we're starting to look for weakness coming in. But the last 3 months, they have been failing to hold below the 9 EMA, and the trend is very much intact. And again, we don't even violate the longer time frame trend until we get below 24.9075. So pulling back to the 2500s or into the 2500s does not mean that the roof is falling and the all-time high is in. I do not believe that. I'll tell you why in just a couple of minutes. On the weekly, we were seeing the possibility of a trend change here with the break below the 9 and the 20, and we've been fighting the last few weeks the 9, and this week now we're coming up and we're looking at possibility of a break above the 20. So possibility of a continuation pattern to the upside. Still undecided though. On the daily, we were seeing stair-stepping down and looking for a possible trend change, but in the last few days they bounced off of that month low. The month low is 25.91 and a quarter, and we've moved up and we're now back into the 2700s and above a very key level at 2703. 2703 happens to be the move down. This whole move down here, the 50% retracement is 2703. So above the 2703, okay, we could get released to the upside and move up to that 27.20 area. Going to the intraday, the 4-hour, you can see that we are slowly getting back into this upward trend with slope and separation to the upside. And then just last but not least, going down into the 30-minute, coming into the RTH session, we are basically consolidating and they popped up and we're breaking above the 9 and the 20. So taking a look at the structure of the market, just quick narrative so that you get an idea of the context. We had the start of this trend, okay, with the gap up from this balance, and we work all the way up into new all-time highs. A note about the all-time highs, that this is an unequalized all-time high. What do I mean by that? Is the all-time high was put in the Globex at 28.83 and a quarter, adjusted to the June contract, and the RTH all-time high regular trading hours is 28.80 and a quarter. Statistically, this does not hold. The RTH comes up and takes out that all-time high at the 28.83 and a quarter, or not where you have an all-time high that's unequalized. We try to hold balance in the 2800s, then we gap down. We take a trip all the way down to the 25. It's actually 25.29 in the Globex, and we bounce. We tried to break out and get back into the 2700s. We come right back up into a prior area of price acceptance. We fail, we come back in, and then since we've broken back down and gapped down here on the 23rd of March, all we've been doing is just taking trip through value and creating this huge undetermined fair value. Now, the smaller time frame value area high was this 2681 area, and we've now broken above that and gotten into the 2700. So the target up here is this 2706.75, which is where they tried to hold to break out the last time. So we're looking for us to come up here, accept this price, and then get the breakout of the longer time frame micro composite value area high at the 1750 area, and make a move up into this area up here, which was our last major fractal high at the 2800 and at 7 and a quarter, and see if we get that continuation and the move to the unequalized high. Have we broken out? Not yet, but we have broken a key area of the 84.50 and the 81 area. And so we're broken out of the shorter time frame balance and going into price discovery, but we're not out of the woods yet. And I just caution you, if we fail up here, and again, this 2703 area is important, because if I draw a fib, from up here, down here, the 50%, okay, is right there. I thought it was 03. I'm sorry, it's 08. So watch that 08 area. And 61 is up in the 51, right near this microcomposite VPOC. So the larger time frame targets to look for, levels to watch. I'm still watching the 03 and a quarter. Below that, we could get a move down to testing and closing the gap from yesterday, and a push down back into that 91.75. Key line in the sand below now becomes the 84.50, and below that, we could come right back into the major balance, which is the microcomposite VPOC, which is in that 68.50, 69 area. If we can hold the 03 area, look for the push up into the 675, a takeout of the overnight high so far, and a possible push through up into that 18 area, and come up into testing this value area high and the 3-day microcomposite VPOC that's sitting right there, which was the area where we tried before we gapped down the second time. So looking at the overnight inventory is about 80% net positive in time and price. We have a multiple distribution with the Globex VPOC just at that centennial number. And we're likely to come back and test that if we don't hold the 03. Overnight low 92, overnight 92.75. We did just create a week high here. You've got a high at 2706, came up again to 2706. So we created a double top in the Globex. This is a weak high and likely to take it out at some point in time and come and hit this 2607.50. So moving our levels over, our overnight high is now 2706. Our over underline is going to be 98. This was the area that they were really struggling to get above to test that 2700. So our over underline below that, I'm looking for a rotation down into the 96 and the 91. Key line in the sand is 91. Now, if we get below the key line in the sand, we have a double distribution with a very wide LVN. So one of my hypotheses has to be a move down and a failure to hold that 91 and coming down and finishing the auction here, okay, and chopping between the value area high of the larger time frame from the March 22nd on and the key line in the sand and filling in this area. Our overnight VPOC is at the 2703/4, which is basically just above the 2700. Now, a lot of you will ask me, well, why don't I have a trade area here at the 2700? I have a very good reason for that, is it tends to screw people up. Okay, centennial numbers are very tough to trade because they have a tendency to chop 2 points above and 2 points below and chop people to death. So I made it a rule in my trading that I don't trade the centennial number. So I'll either be in a trade or I will wait till we break below 98 or bounce off of 98 into that. I'm not going to execute a trade right at a centennial number. So in terms of hypotheses, they're going to be very similar to what they were yesterday. I'm looking at a open auction out of range. I'm looking for a move down to test the range, from the prior day and the centennial number. I'm looking for a dip down into this 98 and possibly down into the 96. Somewhere in this area, I'm looking for buyers to step back in, rotate us back up, chop this 2700, and then push up through the overnight high and push up into the rule of 10. Okay, and the move up into 2710 with maybe a late date probe up into the 14 to the 18 area and testing this key area up here. That is hypo 1. Hypo 2 is equally weighted because we've got unauctioned territory, and there's always the probability, I've seen it many times, where they dip into above a centennial number and then they fail the next day and they take out all the weak longs. So hypo 2 equally weighted, open auction out of range, a push up into the 2706.75. Take out the overnight high, sellers step in, rotate us down into closing the gap and taking the naked VPOC, coming down into the 91 area and then failing and coming down and chopping inside of this distribution zone. Like I said, one of my plans has to be. And then, of course, with the gap, we've got gap and go rules. So right now we're trading 2703. I don't know if that's going to be it, but our close was 2696. So our half gap fill is 2699.50 approximately. I'll have to adjust this on the open. Okay, and the gap and go, hypo 3, open auction, out of range or an open test drive, a move down, failure to close the gap like we did yesterday, maybe dip in to fill the half gap, but buyers step in early, take us up through the 26, the 2706, push up into the 27 and 10, push up into this 18 level, and get continuation with a late day probe up into the 25 to 27 area. Keynote, our daily average true range is running at 34.75. So based off of the overnight high, overnight low of 92.75, our daily upside ATR is up here at 27. If we get above 27, this could be a big day. Now, weekly critical mass. Our open of the week is 2662.75. We have 2 sessions left. Our full session daily ATR is 34.75. Multiply that by 2, 69.50. Add that to the 62.75, and our weekly critical mass is up here right now today at the 32 and a quarter. And if we get above that, I would not try to fade that. In fact, I would not try to fade anything above the daily upside ATR target. In terms of the daily downside target, I've got to just make that adjustment off of the move here, 2706 minus the 34.75 average true range, 20 period, and that takes us down to 71. Why is this important? Why do I do this every day? Well, because you've got to have an idea of what your range can be. So based on the overnight high and the overnight low right now, we have range capabilities up into the 27.27 or down to the 26.71. It keeps me grounded, okay, and thinking in the probabilities and how to shift my thought process from each hypo. Just like yesterday, when we were looking at the possibility of hypo 2 playing out, but then we rejected and left the gap and broke the other side of the prior day range. I was off all shorts and thinking hypo 3. So hypo 3, gap and go, failure to close the gap, test into the prior day range, find buyers, rotate up into the 18, and then push up into the 25 to 27 area. Hypo 4 is a take back day, always has to be, and a open auction out of range, either failure to take out the overnight high or push up, but then the sellers step in, rotate us down into the 96, push down to the 91, fall through. Okay, the difference between hypo 2 and hypo 4 will be we fall through this area, break below, come down here, test the where the VPOC was most of the yesterday, and then fail and push down and test the year open down in that 26.75 and a quarter, and then push down into the 71s and come back right down into balance. Okay, the longer time frame balance that we've been in here. Okay, down here at the 68.50, 69 area. So those are my 4 main hypotheses. My look at gold. Gold, like I said, has broken back above that key level. We talked about this yesterday, that gold was in a basing pattern, and there was really nothing to do down here because it's so hard to trade gold when it's in a balancing. And we were talking about we needed to break above the 1319.90 or break below the 1304, put us back into price discovery, okay, and get us back into a trend type scenario, which makes it easier to trade gold. And right now, you want to watch for gold to hold this 19 for a move up into the 25 to the 29 area with a possibility of pushing up and back up into that 1360 area. That's now become our major key line in the sand, as it was when we were up here, and it becomes again our key line in the sand below, and the primary target above is the 25. Below the 19, look for a rotation all the way back down to the 14 area and possible trip through value again. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.